Hey guys, welcome to Great Crash of 2022. You are just in time and take a seat, right? The show's just getting started, the markets are going down, and it's gonna get a whole lot worse. Now, the thing is that markets are really crashing, people are fearing the end of the world, and I'm making this video unscripted because I really want to share my thoughts of what's really going on and how dangerous this investing environment is, right? And as investors, we all really having a tough choice to make. And it's really these two dichotomies, right? Do we sit back and do nothing, we wait for the crash to accelerate, or do we take a risk now and buy assets? And the thing is, even if we want to buy something, what in the blue hell are we gonna buy, right? What should we be buying? There's stocks, there's commodities, there's bonds, there's real estate. Where do we put our money to? And I think right now, the whole world, we are just too addicted to the previous boom that went on, right? The previous stock market boom, since 2010, it has been artificially fueled by low interest rates that just went ballistic in 2020 from all this money printing that is going on, right? The Fed has really spoiled everyone rotten. And suddenly everyone is at home, like me, like you, we have nothing to do. Suddenly there's steamy checks coming up in the mail and Robinhood, right? We all know Robinhood. Suddenly, everyone has a Robinhood account to buy stocks, and this sets up a really big moral hazard. Everyone's really expecting a 10 to 15% return every year at minimum. And if you're not really making 50% or even doubling your money by the end of the year, you're considered a failure. And I think this deleveraging of the economy, of the stock market, is really going to inject a lot of fear and a lot of healthy dose of reality, or maybe unhealthy dose, back into the system, right? The fear right now in the market is very, very unprecedented. And there's something called the Fear and Greed Index that you can take a look. It's created by CNN. So, take it with a pinch of salt. But it shows that there's really an all-time low. And it indicates a massive amount of fear in the market. And normally, if you're a contrarian, right, you see all this fear, blood on the streets, this would be a perfect time to buy, right? A great signal to buy. But the thing is that we are missing a big piece of the picture. There's some pieces of the jigsaw puzzle. They are still not fitting right now. And I think the first piece is that the Fed is really going to start selling their bonds, their liquidity. A lot of liquidity is going to be sucked out, right? A lot of money from the system is suddenly just going to disappear like that. And that means there's going to be less money to flow into assets. And right now, right, things are really getting very bad when it comes to the food crisis that's going on as well, right? Just look at Indonesia. They have stopped all the export of their palm oil. Look at India. They've stopped exporting wheat as well. And all this means that where will all this money that we all have eventually flow to, right? Excess money is gone. Risky assets like stocks, the money's not going to flow there, and all excess money is going to go into food. And it's likely because of this, right? This is going to be another kind of headwind that will stop the markets from rallying, and it's likely the markets will tank even lower, right? People just aren't used to the pain, and we have a whole new generation of investors who really haven't seen or taken a loss for 10 years, right? Myself included, I've seen the market rally and rally and rally. I've powered into the S&P. I've gotten quite a bit of gains over the years. And right now, everyone's getting annihilated, right? 20% crash. Just take a look at the Luna crash. The stable coin that turns out to be not so stable after all. I think it lost like 95 or even 100% of its value. It's getting delisted from Coinbase and all the different kind of exchanges. And I think this is just spreading a contagion that will just spread and spread and spread, and it'll just get out of control. But the thing is, at the end of the day, me and you, despite all these forest fires and all these entrance to hell happening, right, we all still have to make a choice, right? The people who are hurting the most are the people who actually bought assets all the way up. And assets right now are heading lower, and it kind of makes sense that if we buy assets on the way down, we kind of get a better average price when it hits the bottom and it starts to go back up, right? But I understand hesitation to invest or buy stuff because at the end of the day, no matter what, you'll still be making a decision. Whether you're staying in cash or whether you're buying stocks or commodities, a decision is made. And I want us to really understand the downsides of any decision that's going to be chosen, right? Because as things are right now, there really isn't a great choice. You're gonna get annihilated anyway, even if you stay still, whether you move to the left, whether you move to the right, whether you hit up or down, there's gonna be pain in every direction you go to. So let's talk about stocks right now, right? The stock market. Oh, things are bloodbath there. Stocks are just gonna get obliterated even more. And honestly, we are slowly slipping into a recession if it isn't already here, right? Now, a lot of people are seeing stocks for the first time through a new lens, right? It's back to the good old value investing. And what this stock can do for me today is no longer about pie in the sky ideas. We are no longer together with Cathy Wood in her ideas about investing in innovation. We are talking about earnings, solid businesses, growth plans instead of all these fancy stories out there. What can this company do today and what are their growth plans tomorrow, right? We are seeing things like P/E ratio being talked about, and that's why you can actually see all the P/E ratios crash down to earth, right? And when it comes to the ratio wise, it looks like we might be bottoming out, but is this truly the time to go all into stocks? And the thing is that we won't know for sure because fear's real contagion that spreads like wildfire. And the previous bubble was actually blown up so damn big that it could even overshoot lower, right? It's entirely possible for stocks to plunge 10, 20, or even 30% from where we are right now before it bottoms. And I get it. The most painful thing you can see is your gains evaporate from the last 5 to 10 years, right? Every time the market crashes like 20% down, it needs at least like a 30 or 40% gain to go back up to parity, to get back to where you are. And the most agonizing thing is if it's time to get in. And unfortunately, I don't have the answer, right? No one actually has the answer or crystal ball to see how the stock market is going to perform 5 months or even a year from now. And you might be thinking, why don't I just stay in cash, right? Why don't I just stay in cash? Now, the thing is that if you stay in cash, yes, your nominal value of the cash will not go down, right? $100 is still $100, $1,000 is still $1,000. But by not investing in anything today, you are claiming, essentially, you are saying that the US dollar or whatever asset or whatever currency that you're holding, like the Singapore dollar that I'm holding right now, is a much better asset than everything else around you. And every asset class will fall more than your inflation rate. Essentially, that's what you're saying, right? Because cash is being destroyed at around 8% a year. And to keep things real, inflation is higher than 10% at bare minimum if you live on the planet Earth, right? I just need to go to a cafe, I just need to go to a grocery store. Everything seems to be jumping up in price 5%, 10% every few months, right? And if you add up all these compounding increases, right, it's definitely much more than 8%. And the thing is, we need to really wrap our heads around, and this is not really a classic true deflation, because the true deflation is everything is crashing in price, even the food that we buy, or maybe inflation is just controlled at 1 or 2%. Then yes, at that point you can say cash is king. But dear Lord, 8%, in the sense that if you don't buy something, you're still getting pulverized. And how much food, beans, and band-aids and water can you stack, right? This brings us to the next asset class. How about commodities? This channel and many other channels out there, we are mainly focused a bit more on gold and silver, right? But are they truly the answer? And the thing is, a lot of people are preaching buying gold and silver. And yes, for the long term, I'm talking about the long term, right? Maybe 3, 5, 10, or even 20 years, they have been proven to store purchasing power. But in the immediate term, you could still end up with a bloody nose, right? In the short term, they could go lower and you need to be absolutely prepared for it. Right now, there is a run to the dollar as debts need to be repaid in dollars, right? A lot of countries right now, they are loaning their money, and a lot of corporations, they're actually holding a lot of debt. They're issuing bonds, all denominated in US dollars. And the thing is, you need to repay all this back in dollars. And right now, we can see countries and companies dangerously on the brink of default. And this is one thing that as commodity investors or just gold, silver stackers, we need to understand and appreciate, right? It's not just because inflation is going high, that does not mean in the short term, gold and silver will continue to go high as well. Because the economy is set up with the US dollar at the center, and if anything goes wrong, right, the immediate knee-jerk reaction will be to the dollar, whether we like it or not. This is what's really going on right now. Brent Johnson, he has a theory called the dollar milkshake theory. I'm going to make a video about it very, very soon. And I think it's really, really coming true, right? There is a rush to dollars. And because of this, right, all global commodities are priced in dollars. Doesn't matter whether it's wheat, whether it's orange juice, whether it's pork bellies, whether it's gold, whether it's silver, whether it's oil. And because of this, there is pressure on the commodity prices to actually rise. And if you're in a currency that's actually getting devalued against the dollar, you're even getting pulverized even more, right? And this is why I think in the very long term, countries are getting so pissed off with this system and they want to de-dollarize, eventually. But in the short term, they just can't. The dollar has created a kind of self-fulfilling prophecy that keeps it propped up at the top, especially during this crisis when there is a shortage of dollars globally, right? I mean, I don't want to bring this up, but Russia's $300 billion were frozen. Now, those are $300 billion US dollars worth of stuff, maybe some euros in there. And they can't really flow into the global economy. And because of that, that's why you can see countries, especially Russia, about to default on their debt. And this isn't really good as well. Now, let's talk about bonds, right? And this sounds like the perfect dream come true. Your capital stays intact. You gain a yield of 3% or more for the 10-year duration. Oh, that sounds great. But here's the thing, right? If you buy bonds, you are locked in for 10 years. If you want zero risk, right? You want a capital back and you want to enjoy the 3% coupon. But just remember that the Fed is about to dump a boatload of bonds back into the market while raising interest rates again. And this will just spike yields and devalue your current bonds. And now you're caught in quite a bad situation. Right? If you're buying bonds, what you want you want the whole world to eventually rush to bonds so that you can get out of dodge, right? You buy bonds and let's say your yield at that point is 3%, 3, 4, 5%, and the whole world floods in your bonds suddenly, the bonds in general, the new bonds issued, it's used now maybe only 1 or 2%. Suddenly your bond becomes more valuable and you can sell it off at a premium. That's what you want as a bond investor, right? If you want to get out. And you're also opening yourself to a black swan event that the Fed can come swooping in again and start printing money like there's no tomorrow. The Fed suddenly becomes from bond sellers, become bond buyers again, and then inflation will swallow all bond holders when it comes to real interest rates, right? And then suddenly you'll see commodities rally, gold and silver go up, the stock market, the S&P reach all-time highs again, and now as a bondholder you're caught. So there's no real safety in bonds as well. And I think at the end of the day, right, we have left easy mode, right? If this was a video game, if this was an Xbox or PlayStation game, whatever console you play, right, we have left tutorial mode and we are now entering hell mode, right? This is the highest difficulty. Everyone right now is bearish to the point that it's getting quite depressing just looking at the market chatter and looking at the charts. Right now, right, if you're buying anything today, literally anything except for the consumables like toilet paper and toothpaste, you need to be ready to lose even more tomorrow. You need to be ready to get slapped in the face the moment you wake up. You need to be used to seeing the color red across your screen. You need to be ready for Chuck Norris to roundhouse kick you as you're suspending upside down from the ceiling, right? But if you don't buy any asset today, right, your money is literally burning up in the atmosphere by 8 to 10% a year in this shitty environment. And you can't really win in any scenario if you buy anything and if you don't buy anything as well, unless you turn your home into a mini quickie mart from The Simpsons, right? You start stacking food everywhere. And I truly believe that at the end of the day, the water will recede, all this chaos will subside. There'll be sunshine and rainbows again, but no one can give you a time horizon on that, right? No one can. The Fed can't, I can't, no one on YouTube can't, Janet Yellen in the Treasury can't, your government can't, no one in the world can. And personally, this fear has hit me as well in quite a big way, but I'm still buying assets, right? I'm reducing my purchases by around 50%, my investable amount of money. I'm reducing it by quite a bit, by half. But I'm buying all the way down, right? But I'm buying like when I see big crashes of 2, 5, 10%, let's say the market tanks by 20%, I'm going to pick up a bit more assets, right? I mean, it's going to be like the VT index, is going to be like the S&P 500, is going to be gold. And at this point, I've totally lost faith when it comes to tech or growth stocks. I'm purely an index person now, or value stocks. When it comes to gold, I'm still buying gold. But for silver, I'm currently holding off now, and I'll create a video on it, but I've kind of reached the stack that I need, so I don't see any point of stacking additional silver. But sentiment right now is so bad that this could just make things go worse. And you need to be okay with what you choose. You need to make a decision. Even if you're not buying anything, that means you decide to be in cash. And if inflation continues to rage on, and if it gets worse, if the Fed decides to print money even more, that means everything will rally and your cash evaporate even more. And that's the choice that you'll be making, and you have to be okay with it. Conversely, if you buy into stocks, you buy into gold, and the market crashes another 10, 20, 30%, you need to be okay with that as well, right? There's literally no asset right now that has zero risk. And in fact, the risk for all, whether it is immediate or a few months down the road, is incredibly high. So I really think there's nowhere absolutely you can hide right now, and no one can eke out the consistent gain during this period. Anyone who can is probably the king of investing and can be crowned the god of Wall Street. And I think this is more or less feels like the 2008 crash all over again. But this time, instead of watching from the sidelines as a broke college student, right now I have some cash, and it's still painful and frightening to invest. But we must, right? We have to make a decision whatever we choose. And whatever you do, just make sure you don't over leverage yourself. Don't go into margin trading. Yes, great wealth can come from margin trading, but in this scenario, anything can happen, right? And the dumbest thing you can do right now is go into debt, especially when interest rates are going to increase. So make your choice, guys. Are you going to stick with cash? Are you going to pick up more stocks? Are you going to buy gold? Or are you going to run to bonds? Whatever the choice is, stick with it. Remove fear from your decisions and accept the outcome. Because right now, no one in the world can tell you what will happen in the next 6 months or even the next 6 days. Stay strong. I love you guys, and catch you soon.